This impeachment process could take months. Not that many people are surprised that it's happening, but it could drag out. What does this mean for Dilma Rousseff's economic agenda? Because her focus will be on surviving.
Definitely our focus will be on surviving. We're very cautious about Brazil. We're underweight in Brazil. And the reason for that really is because of the very weak economy and the impact that's having on the budget process, which is leading to higher yields and lower stock prices generally. So I think how this process plays out will only have a real impact on the market over the long term if it turns the economy around. Because the economy, we had a dreadful number on GDP earlier this week. We've downgraded our GDP forecast even more. So that's the basis of our underweight, the economy, and therefore the politics has got to turn that around before I think investors would really get interested in buying. And so we're happy to stay underweight, frankly, at this point.
I mean, it did seem like investors were relatively optimistic. I mean, if you look at the biggest Brazilian ETF, that jumped about 2%. We did see the real move higher against the dollar. So it seems like markets want this. I mean, what's your best guess for what would happen if Dilma Rousseff was actually impeached?
I think as I say, I think the way it would actually contribute to a stronger market is if, as a result of the impeachment, you ended up with more potential congressional agreement on fiscal measures to bring the budget deficit under control. So I think that's what's going on here, that there is clearly gridlock at the moment in the Congress. That's very well known. That's contributing to these bad budget numbers. If you can try and break that gridlock, however, over the long term, that's probably where the more positive response is coming from. But frankly, we're very skeptical until we see this really happening. Our concern is a very, very weak economy, a not very cheap stock market, a currency that still looks vulnerable to us, and frankly, sharply deteriorating fiscal accounts at this point in time in Brazil.
So given all that, as we look at emerging markets as a whole, and you look at how the Fed is getting ready to raise interest rates, it feels like we have a very well-telegraphed U.S. interest rate increase. How much more room is there for emerging markets to sell off? I know you're underweight in Brazil, but what about the sector?
Overall, we do expect emerging markets to have a slightly better year next year. It's been a very poor year this year. We're looking for a cyclical bounce in earnings because so much of the hit to EM this year has been because the dollar's been strong, commodity prices have come down. That's not going to be repeated to that great extent, I think, next year. So we are a little bit more bullish about it. We strongly believe the Fed had been priced in by emerging markets in mid-September when they didn't move, and then we had a rally, and now we've pulled back again. I think they're pricing the Fed back in again right now. And therefore, if the Fed moves, which we expect, and if she comes out, because what matters for the market now is not does she move or not. As you rightly say, it looks like it's going to happen. What matters is what the expected path of rates will be afterwards. And if the Fed is relatively dovish, which I bet they probably are going to be, I think EM does perfectly well off the back of that because we've broadly priced it in at this point.
Well, and to your point, if you take a look at the MSCI Asia ex-Japan and previous rate hikes, they have really bottomed either 1 month before or after the rate hike and then have rallied anywhere from 15 to 37%. That sort of pinkish red line at the bottom is where we are right now. I mean, could we see like a 37% rally?
No, we're not going to see that because the problem that EM, actually, I believe, and I've written this in my research, that the Fed is a bit of a sideshow here. What really matters in emerging markets is, are you going to return to earnings growth? The growth story's been poor, the GDP growth story, the trade growth story, and the earnings growth story. And therefore, I don't think you're going to get that sort of scale of a rally. We had that in 04 to 06, but that was the time when EPS growth in earnings per share growth in EM was 30% per annum. So I think you may well get some sort of cyclical response, positive response. Fed's underway. That's good news. They're going to be relatively dovish going forward. But that's only going to take you so far until the earnings story improves. Now, we think the earnings story will improve a little bit. And I think from where we are today, EM may be up between 5 and 10% by the end of next year. But it's not going to be a 30, 40% year as far as we're concerned.